Hello, Steve Koukoulas here, economist in residence with the great folk at Zagga, and 2026 kickoff for the economy and financial markets. And dare I say it, the news is generally pretty good. We've got confirmation that the economic recovery that was unfolding around the second half of 2025 looks to be continuing. It's not a strong economic pickup. Don't get me wrong that I'm not euphoric about the economic outlook, but economic conditions now are better than they were 6 and 12 months ago, and that's good news. And where is that strength coming from? Well, a lot of it's in household consumption. So despite the fact that consumer sentiment's still pretty weak, we consumers, you and I, are spending. And we've got household consumption growth rising by a pace above 6% in annual terms. And while some of that might be linked to Black Friday sales and the like, there is still a clear evidence that it's not just 1 month or 2 months, it's about 3 or 4 months now where household spending has picked up. So perhaps those interest rate cuts that we saw starting in February last year are freeing up a bit of cash for consumers to spend. The wealth effect from house prices and the stock market being pretty strong is probably feeding into some spending as well. The other really good news is that dwelling construction activity is picking up. We've had building approvals, they jumped 15% in November. Now, that was predominantly, in fact, all of the increase was apartment blocks in the big cities. So that's fine though, because of course apartments are going to be the way that the housing shortage is going to be corrected largely. And so we're seeing some of the early evidence of that reform of rezoning, fast-tracking approvals, fast-tracking building, and the ongoing demand for housing sparking a lift in new construction activity. And that's a good thing. And I think, as I've alluded to for the last 6 months, I think it is now, I think dwelling construction is the dark horse of the economy in 2026 and 2027. And by that I mean, it's probably going to be the area where we look back and think, gee, wasn't that a strong pickup in construction? All the stars are aligning for the construction sector having a pretty good 2026, 2027. Of course, the spanner in the works, if we can call it that, was the inflation data late last year, which showed a jump in inflation. Now, there's a big debate about what those inflation numbers meant. If you look through where the inflation lift occurred, a lot of it was what we call administered prices, so the ending of the electricity subsidies. Public transport fares were increased in most of the states. Things like local council rates and charges went up. So they're really outside the domain of the Reserve Bank, like a RBA rate hike or cut's not going to change any of those things. So that said, inflation still caused a bit of a worry in the market. Interest rate cuts are now no longer being priced in. We're speculating now about whether there's going to be a rate hike this year. The jury's still out. The RBA's made it very clear that they're going to be looking at incoming data before they make their decision on whether to hike, hold steady, or cut. They're the only three options, obviously. So the inflation numbers that we keep getting printed each month now will be really important for that discussion, as will the unemployment numbers. And speaking of unemployment, despite the better economic news, we do have confirmation that the unemployment rate has been generally creeping up. Employment growth has been creeping down. There's been a big pullback in full-time employment. Some of that's linked to the government sector finishing its hiring spree, which of course was one of the reasons why the labour market was so strong over the last couple of years. So a lot of those projects and schemes are coming to an end. So the labour market is softening as a result of that. But the bottom line is that the economy just more generally, even though there's encouraging signs, needs to grow a little bit more to ensure the unemployment rate doesn't go up any further. So a fascinating time for the economy. Of course, overlaying all this, we've got geopolitical issues. We've got obviously the ongoing Russia-Ukraine issue, Venezuela, Greenland, China, Taiwan. There's a myriad of things going on out there. Impossible to read what's going on and how they're going to unfold. But for the moment, in terms of the impact on the Australian economy and Australian capital markets, the effect's been relatively small. But as we all know, that can change very quickly. So kicking off 2026 on a pretty positive and optimistic note. Let's hope it can continue through the remainder of 2026. And I look forward to seeing you all through the course of this year. Thanks very much.